Hello, everyone. This is Realtor Linda Peltz. Today, I'm here with Michelle Johnson. She's with Hero Loan Team, and we're going to be having a great discussion on what, Michelle?
Well, I was thinking, Linda, hi, everybody. I was just thinking we could talk a little bit about the interest rates. So I don't know if everyone knows out there or keeps an eye on them every day. But what happened in the last month is that interest rates really went up, which I know a lot of people, when interest rates started to climb, were thinking, well, I'll just wait until interest rates go down. And that was what in 2022. Oh, I think like at the end of 2022 is when interest rates started like climbing up into like the fours, fives. And a lot of people, buyers were saying, well, I'll just wait until the
Just
interest rates come back down.
wait.
I'll wait.
It's
I'll
like,
wait till
but
the
they're
interest
not
rates
going
come down.
down anytime.
Right.
And they'll
Yeah.
never be at that
Right.
2.5% again.
Right.
Sorry.
And another thought that happened at that time was that these interest rates are going to cause the housing market to, the prices of the houses to go down. And so I'll wait until that happens. So, what ultimately happened to these buyers was they waited and waited and waited. And what kept happening was interest rates kept creeping up and creeping up. And also, the home prices were still appreciating. Maybe not as quickly as they
Yeah, they weren't
appreciated
going
in
as quick, but they were
2000,
going,
2001,
they
right?
were doing
But
this
they're
bounce
still,
along. They'd go up a
yeah,
little and then they'd
exactly.
kind of stabilize and then they'd bounce up a little and then stabilize. I mean, it was just kind of
Sure.
a bounce along right there.
Right.
It wasn't like
Exactly.
they were going straight up there for a while. At 2 weeks down the road, I'd be, what do you mean it jumped 25,000 in that area?
That's right. That's right. It was crazy. So much so that it like after, 2020, 2021, most people got an adjustment on their house raising their property taxes because their equity was so high. The increase of the value of their home had increased. So at any rate, now they're back to just regular typical like climbs, 3%, 5% a year, which is a standard. But what is not happening and what the buyers were sort of like waiting for and hoping to happen is that these prices would drop 20,000, 50,000, hundred thousand
And I
dollars.
kept saying it's not happening, people.
No.
What
Yeah.
happened is your interest rates are going up, house prices are going up. You now qualify for a whole lot less than you did,
That's
So
right. Even
now,
2 years,
now you
like
can't
right.
get into that whatever $350,000, $400,000 home. You're back down to a $300,000 home, which there's not a ton out there because the house prices kept going up.
That's right. So, yeah, exactly. So, what happened was we waited for this, we waited for that. It didn't happen. And instead, what really happened is house prices went up steadily and the interest rate also steadily climbed. And then last month, the interest rates actually climbed even more. So, we were actually really close to 8%, or around 8% in interest rates. So, this month, which is great, the interest rates have lowered a little bit. So now they're at around 7%, depending on what type of loan that you get. And so many people think, oh my gosh, that's so high. I was hoping to get like a 2.9%. It's
Those
like,
days are
well,
over for a while until the
right.
world implodes on itself again.
Right. And here's what we need to understand is that they are lower now than they were last month. They're at a 1 month low right now, and they're in the sevens. So,
Mhm.
really, when is the best time to buy a house? And the joke is kind of like 10 years ago. But if he didn't buy a house 10 years ago,
You better
then
do
like
it
right
today.
now. Exactly. So
Because
then
in
10
10
years
years
from
from
now,
now, you're going to seem like you got a really good deal.
100%. Like that's the answer there. And so me as a buyer, sitting there thinking I need to wait for X, Y, and Z. Like I need to wait till I get a raise. I need to wait until the interest rates go down. I need to wait until I save more money. The truth of the matter is that none of these things that you're thinking you will do will change your ability to buy in a substantial way that's going to be faster than the increase of the housing market. So the best thing that I can do as a buyer is take advantage of the rates as they are today. Find a property that fits my budget. So it might not be the 3 bedroom house with a pool and a 3 car garage in the fancy neighborhood. It might be a townhouse in a livable neighborhood. And then once I get into that townhouse and I live there for a while, then I get to actually leverage my investment. So let's
But at
say
least you're paying your own mortgage and not somebody else's. Because that's
Exactly. So now,
what
right. So
happened.
now I have, yeah. So now I have $3,000 going to a mortgage versus going to a rent. And that's a big difference. If it's going to a mortgage, then I'm actually getting that money to pay down my equity. And it's sort of like a little bit of a savings account.
Yeah,
And then
kind
I
of a
can do those
savings
other
account.
things. Right. And then I can do those
You're
other things
living
that
in
I
your
talked
savings
about.
account.
That's right. That's right, you are. And also I can do those other things that I talked about, like get a raise, continue to save more money, wait for interest rates to go down. I can do all of that in a home that I'm paying for. So maybe it takes 3 years, maybe it takes 5 years for me to feel like, okay, I'm in a situation where I really want to get a bigger house, a better house, a different house, a new neighborhood, whatever it is that I wished I could have gotten last time but couldn't quite afford. Now I'm in a position where I can take that money that I have put in the savings account that I live in, and any money that I was able to put in a savings account that I don't live in, and I can really start evaluating, well, what kind of home can I get now? So maybe my home value has increased 25,000, maybe it has increased 50,000, maybe it has increased 100,000. Depends on the market, depends on where I am, depends on how much I've paid down, all of those things. But I can take all that money and now I have a down payment for another home, and the market will have changed. So, maybe the rates are the same, maybe they're higher, maybe they're lower, but it still puts me in a better position when I'm looking for
Mhm.
another home in 5 years versus waiting for 5 years and then saying, okay, I'm ready now. I've saved up 10,000 extra dollars. Well, 10,000 extra dollars is not, I mean, it's going to cover your closing costs, maybe at that
And
time.
I think that's another thing that buyers don't really realize. It's not just that you have to qualify for the payment every month, but you have to, there's closing costs that are involved to just get the loan and get it through escrow. And I don't think a lot of things that people take into account is there's solar payments a lot of times nowadays. There's, if you're out in kind of the country areas or the larger lot areas, I guess, typically we'll have a higher fire insurance. Those all have to be a lot of times paid up front. And that
Mhm.
adds to your payment. So now not only do you have to qualify for the house payment, but you have to qualify for all these extra things. And that's cash that you have to bring into closing. It's not like you go in to a store, and I think we've had this discussion before, is and just pick something off the shelf, go pay for it, and take it home. It's not like that. There's a ton of cost to doing something like this. This is one of the biggest financial investments you are going to make. It's you're investing in something. So you have to pay money up front a lot of times to close it with all these different people that's trying to help you. And right now, the big thing in um, the news, I guess, is how is the real estate going to change for the buyers? And that's, I know they talk about it's the sellers that made the change, but I hate to tell everybody it is going to affect the buyers. But in the full circle of things, it's coming back to the sellers. That's who's really going to be affected. It's just they don't quite understand that yet. You kind of cut your own throat with these lawsuits, and now and now it's going to come back. So the market's going to slow down. You're right, because the buyers aren't going to have enough cash to close, because it's not like you say, yeah, give me that loan and I go move into this house tomorrow. It doesn't work that way. They have to be able to come up with enough cash in the beginning to cover a lot of these different things, down payments, and they have to cover a certain percentage of the home and whatever the guidelines are for whatever loan you put them in.
Yeah.
And there's just not going to be enough money. So what's going to end up happening in this new market that the sellers have created with all these lawsuits is there's going to be a lot more sellers credits going to have to be going to the buyers to cover all this, because there's just not going to be, so the houses are just going to sit out there for quite a while. And yes, until the sellers realize they're going to have to start giving these sellers credit and get their nose out of the air a little bit, they're going to kind of sit out there for a while until eventually it's going to reverse. Right now it's a seller's market, but
Right.
it's slightly, it's
It's
subtly
changing.
Yes, changing. And by the time they make all these real estate changes, it's going to affect the lending, which you've already seen some of that. By August, September, it's going to start switching over to a buyer's market. And either the sellers are going to have to wise up and start giving some of these sellers credit, even though that was their whole goal of these lawsuits, is to get out of paying, you know, it's not going to work if you want to sell your home. You're going to end up having to give some sellers credits in order to help these buyers get into the next home and get it off your books, right? I mean, if you want it sold, this is just where the market's headed right now. So
Yeah, well, and that's kind of where we come in as well. We do have programs that can assist with down payment, that can assist with closing costs. So if you're out there and you're thinking, well, homeownership just isn't possible for me, that's not necessarily true. You need
not
to
true.
talk to a loan officer, figure out
Because
what,
all your backgrounds are different.
everybody's
None is
different,
going to be
right?
identical to each other.
Exactly. And sometimes we do have programs that help with down payment assistance, and we do have programs that help with closing costs. And like Linda mentioned, a lot of times the sellers will give a little bit of money to the buyer so that they can complete their closing costs and pay for their realtor and all of these different types of things. And even right now, it's like there are a lot of homes that are sitting on the market. There are a lot of homes that go really quickly. So it's kind of like in the middle right now, but it's not a frenzy like it was in
No,
2000, or I'm sorry, 2020 and 2021, where every home was getting 15 or more offers, and you had to like have a bunch of cash if you were actually going to get selected out of all of these different offers. And so it's a really, really good time in a lot of
that was
ways for
a
buyers to
very
buy.
heavy seller's market. We've shifted out
Yes.
of that. We're
Yes.
just getting one or two, maybe three, four offers, and usually out of those, several of them are having to get a seller's credit to cover the remaining part of some of the closing costs on their side, because they got hit pretty hard with having to have whatever their percentage is down for that loan and whatever they're needing for whatever solar transfers, fire insurance. I mean, it depends on the house, but it all
Yeah.
adds up. And they are, so out of those, whatever, two, three, four, five offers you might be getting, there's quite a few having to go to the seller's credit to get a little bit of
Yeah.
a boost to get them to where they can qualify. Because stop and think about some of your programs. And I know you guys are working relentlessly trying to come up with some for this big change coming up in August and September, because that's where we're headed. But um, stop and think about some, okay, they may give you some, but there's a consequence. Sometimes it's a higher interest rate, or sometimes it's so you still, if you need that extra boost, sometimes you got to look at the different programs out there to make sure it's going to fit for that particular client, because maybe they're riding the wire too close. And well, if we
Yes.
bump your interest rate an extra whatever point and a half, then we're still not going to have enough because now you don't qualify. Whereas, if you get a seller's credit, or we're going to need a seller's credit to cover a buy down on the points so that we can get you back down to where you qualify for that amount of home. I mean, it's just a catch 22. And I'm sorry,
Yeah.
you lenders got caught in the middle of that one.
Well, what you actually bring up a great point, and that's that you really need a good team, a lender, and a real estate agent, so that the two of us can communicate and make sure
Very
that we
true.
know exactly what your needs are, know what your challenges are, and how to get you there. A lot of times, a lender doesn't have a lot of experience with programs. They
Mm-hmm.
don't have a lot of access to different lenders, whereas we're a broker, so we have over 100 different lending channels. So it gives us a lot of different options, and it also gives us a lot of different programs. So that way we can speak with you as the buyer and see what all is out there for you that you qualify. What are you
Mm-hmm.
trying to accomplish? And what's going to be the best case scenario? Because you might think, well, I just need the lowest rate that there is, and that's fine. We can get you there, but we might actually need to do something different to make sure that we're covering all your closing costs, that we're getting you into the house that costs the amount that you want to get into, all of these different things. So there's just so much to go into about it. And I
It
think that
really
the
is.
biggest takeaway, yeah, the biggest takeaway is that
Biggest
don't
take.
worry about
No,
what the news says. Don't worry about what your
no.
Uncle Joe
Let us
says.
guide you. Trust us. Let us
Yes.
guide you through this.
Yes.
It's not an easy process. And just,
No.
like you said, a lot of times just because they can get a lending license or get a realtor license doesn't always make them knowledgeable. Find you a good
So true.
team that communicates together, because I'm telling you, we kind of become symbiotic when we get to these transactions. I even have to, a lot of times, call the lender and, once we get on these, and say, listen, I need to know, this is what the house is, because right, every house is different, every buyer is different. This is what's going on this house. Are we going to be able to make it work with whatever this buyer
With the
has,
loan.
with the
Right.
loan? And
Yeah.
we become
Yeah.
symbiotic,
Plus,
and I can't hardly even write an
exactly.
offer until I check with the lender to make sure it's going to work, because I can write offers day in and day out, but if nobody
Yeah.
can pay for it, don't
Right.
waste of everybody's time. So
It's so
yeah.
true. And different loans have different restrictions. We have a
Mhm.
specific amount per month that you're, capable of paying based on the bank. You may feel like you're
Mhm.
capable of paying more or less than that. But the bank says, hey, this is the maximum amount
Mhm.
that you can pay. And then
So
you
they
can
have
choose, do
final
I win a
say,
house for
yay or
less
nay.
or more? Yeah, exactly, exactly. So that's kind of the bottom line between it. But yeah, there are different things like, is there an HOA on the property? Or if you're doing VA, there's a couple of different requirements for that. If you're doing FHA, we have different requirements for that. So it's just a matter of like talking with your lender, letting them know everything about your situation, talking with your real estate agent, letting them know all of your goals. And then the lender and the real estate agent can talk about goals versus restrictions and how
I
we can
know.
get you into something
I
that
bug the
absolutely
hell out of
works.
all of you guys.
But we love it. That's the
Because
truth of
when
the
I
matter
get on
is that
a
we got to stay
project, it's like,
connected.
no, I need to know what you know so that I know how to help these people.
Right. Exactly. And
Because
so
I'm the
that's
one
like the
out there
really
in
the
the
most important
trenches
thing.
fighting the battle on these houses. So,
That's right. And that's why you want somebody local. You want somebody in your time zone. You don't want to have to be reaching out to a lender on the East Coast where, they're already closed by 2 in the afternoon when you're trying to figure out what's going
mhm,
on. You want a
very good
lender that's
point.
going to give you their personal cell phone number so that you can call them, text them anytime, especially if this is your first time doing it or if you haven't done it in 10 or 20 years, and you have a lot of questions and you feel like, oh man, I mean, I remember my first home buying experience. I had a lender I was working with, and I called her on her cell phone and she called me back like hours later saying, don't call my cell phone, only call my office phone. And I had another lender that I was kind of thinking about working with, and he was always available on his cell phone. I could text him at 9 o'clock at night, like didn't really matter. And he was there to answer my questions and make me feel taken care of. And finally, I just told that lender, listen, I'm going with a different lender. And she got really upset saying, oh, I work on commission and blah, blah, blah. I said, listen, I've worked on my commission my whole life. And, there's a reason that you do is because you have to take care of the client. If you don't take care of the client, you don't get paid. So that's what's really important about having a good lender, having a good real estate agent is, can you contact them? Are they available for you? Are they answering your questions? Are they making you
Mhm.
feel taken care of? And do you feel like they have your best interests at heart and that they're helping you to obtain the goals that you want to achieve?
Because we become a team and we really are working for you, whoever our client is. I mean, you are our main goal and we want you to succeed. There's so many background laws that you don't really understand, that we have to communicate and become this pretty tight team in order to make whatever it is your dream is happen, because you don't understand all the guidelines and laws that we have to follow. But in theory, if we're good, we do, and we need to
Yes.
kind of come up with a plan of attack on how to get you whatever it is that you're wanting. But
Yeah.
anyway,
Yeah.
Michelle, you are always a hoot. Thank you so much for joining us today. And you want to give your contact information?
Yeah, absolutely. Well, you can always just go to heroloanteam.com. That's super easy. But if you want to reach out to me directly, I shouldn't say you're almost, you're always welcome to. My phone number is 559-314-6760, or you can email me at michelle@heroloanteam.com.
Wonderful. Everybody, this is Realtor Linda Peltz. We are here for all you and your friends' real estate needs and questions. You just have to reach out and get a hold of us. Make sure you like my YouTube channel. and let's stay in contact. Everybody, my license number 01997670. Have a wonderful day.